James has got us pumping. Welcome aboard, everyone. Thank you, James. Wonderful, wonderful music. Where do you get that from? I'm not sure that's legal, but I'm sure that Paul will get an email suggesting that Ash and I have done it again. And wouldn't be the first time, of course, hence the again bit. Welcome, everyone. It's nice to have you on board for this week's Trading Buddies. First edition, of course, is Monday. And as usual, we will have our good friend George. We're going to ask him, should I call him Gentleman George or Gorgeous George? Should I have a vote on that? We'll have a vote on that. I'll ask him anyway and see what he prefers. He'll probably say neither. Just George. Just George will do. Anyway, let's get into another week of trading, shall we? And we'll start with, as always, the pound versus the US dollar. Now, we were in, up until Friday, of course, a breakout trade, which we caught up here on Thursday and didn't quite get to our 2.5 to 1 target. But reason I closed that, well, I didn't close it. Why am I looking at that? Oh, because I'm on the wrong chart. That's why. Try that one, Jeff. Okay, so the reason that I chose to trail stop on that rather than let it go to the distance was because of that. And that being a descending channel at which we found the bottom, or to which we found the bottom, or one of those words, whichever one works for you. And I figured that once we get to the bottom, you know what I'm like with my structures, I figured that once we get to the bottom, we'd be looking towards the top. So for that reason, I tightened up the trail on the top and took profit. So my, it's my favorite saying, but one of my sayings, of course, and I probably stole it from someone else years ago, is you can't go broke banking. And people will argue with that, of course, and say, no, you should bank more and all the rest of it. It's an argument that I don't want to have. Frankly, it's up to the individual and what your risk appetite is and how you deal with things. How you manage your trades is very important, of course. And I'm always happy if I see an issue, and an issue being the bottom of a range, that I will tighten the stops up, and that's exactly what I've done. If it now goes 100,000 pips to the south side, unlikely, but I won't be that disappointed, I must say. Happy Monday to you too, Paul P. Of course, all the Aussies celebrating today due to the fact that we won our first T20 World Cup. That's cricket, guys. I won't dwell on it, of course, but any Kiwis in the room? Paul, are you there? No. Look, valiant effort, I've got to say. I've really got to say, 172 runs. It's pretty cool in T20 cricket. But the might and strength of the now, I guess, kind of seasoned into T20 showed their wares and got away with it. All right. Now, the question, of course, is, am I going to trade a breakout today? Because the trailing stop has been hit pretty much by only a couple of pips, I would have thought. Can't remember where the stop loss was, but it was pretty close to there, I've got to say. Protected, well, not protected as it turned out. What do we do now? Well, my rule, of course, is to trade the previous 24 hours as a range. That would be here. The bottom of that range would be here, bang on the bottom of the descending channel. Top of the range would be today's trading thus far, which is around about here. So let's take a look at that and see if it is worthwhile placing a breakout trade. So our risk factor would be in the vicinity of 90 pips by the time we added our spreads and took out a little bit of comfort zone. What did I say? 90 odd pips. So you're trading straight into a daily pivot, which is untested, with less than 1/2 to 1. And you're trading straight into a weekly pivot, also untested, with not even 1/4 to 1. So for that reason, I would say, well, actually, you're not trading into a daily pivot. That's not true, because you'd be trading short here, but you are trading into the bottom of that range, which as yet, to my way of thinking, is not proven. We don't know yet if that's going to break or if it's going to bounce. Looks at this point as though it will bounce. I agree with that, but too early to tell. You've got to see a higher low in here. So confirmation of that bullish movement before I would predict where this is going. So it's a no from me on the pound. So let's leave that alone till tomorrow and go take a look at what I do like today. Now, I'll start with what I believe to be, no, I won't. I'll go back on that. I'll start with the one and only weekly game changer bar, which is Kiwi CAD. Now, it does have credentials. I must say it does have credentials. And the reason that I believe it has credentials is not because I love the price action, but because I think that we're in a little bit of a range here, and that I don't suppose it's that evident, but if you go back to March and May or April of 2020, so 18 months ago basically, and look at what happened here: breakout false, hit the top, went to the bottom, bang, lasted 3-4 months, something like that, came back inside, false break to the bottom, bang to the top, bang almost to the bottom, another false break, now we're at the top of that same range. So when I see a candle that says, okay, we've had enough of this, let's get out here and try the bottom again, I've got to take notice. And for that reason, I think, as I said, this has credentials. The thing I don't like about it, or a couple of things I don't like about it, one is that it has the monthly pivot there as a support level. So expecting a bounce off that, got it, even later in the week, of course. And now gap down, we're looking at a bounce here. Struck between the pivots. So the weekly pivots here, the daily pivots here, monthly pivots here, does look very much like a consolidation area to me. So very, very difficult to trade at this point. But as I always say with these weekly game changer bars, don't necessarily have to play them as a trade, or the bar as a trade. You could, no problem. You could put your entry here, you could put your stop loss here. But if you did that, your reward to risk, or if you want to turn it around the other way, the risk to reward, 160 odd pips. Oh, didn't mean to do that, sorry. So 160 odd pips, and your reward till you get to the bottom is 140. So it's odds on, if you like. And I don't have a problem with trading odds on. It's not an issue. But I think you want to be better than that if you're taking 160 odd pips risk into the market. So the way I deal with that is, well, let's wait till it gives us something on a smaller time frame. And at this point in time, there's nothing on a smaller time frame, but it could come a fair bit later in the day or the week, even by getting up to this level. It'll still give you lower high, lower low, lower high in this vicinity, even if we got a false break there. So that's kind of what I'd be looking for on any time frame. Well, sorry, that's not true. Daily and 4-hour time frames is where I'd be looking for that. So whilst the weekly is telling me short, I don't want to trade a weekly bar. I do want to trade something that coincides with that or agrees with that, coming off resistance or as a false break of resistance. So that's the plan. That is plan A, of course. So I don't want to trade the bar, but I do want to trade it. I do want to trade the direction in which it is pointing. So that is the one and only. There are a couple of a couple of positions that I want to take. One of them, drum roll, silent drum roll, is dollar yen. And anybody who knows anything about me and the way I trade will know that I hate dollar yen. I think it's just the most incredibly difficult pair to trade that operates over Bretton Woods, or go back as far as you like. Adam, when he bit the apple, it's his fault. We'll blame him, but it's very, very difficult pair to trade from my perspective, from my trading system. So when I see what I see here at the moment, which is a descending channel, which means you want to trade top to bottom, bottom to top, etc., etc. We've come to the top again, and we have put in a spinning top. Doesn't mean anything, that bar, to me, except that it hasn't been able to close above the horizontal level or above the top of that range. For that reason, I would like to see price do something like this. Come down and hit a support level, whether that be the weekly pivot or the horizontal level through here, then bounce off that and retest either that horizontal level or the weekly pivot and give me a clear lower high. If that were the case, you could twist my arm, and you'd have to do it very, very gently because I'm an old man, and trade this short. So that's kind of what I've got in mind on Dolly.
Sorry, mate.
Hello, buddy.
Good morning to you, and good morning to everyone else. Sorry, mate, can you go through that again? Why wouldn't you want it here? Isn't it a lower high here for you?
Yes, it is. Two reasons. It's a red bar, so I don't want to enter on a red bar. Don't like them. Don't want to trade into the weekly pivot without profit. Probably haven't got room for that. And I'm bang on that horizontal level, which is that level there. So right. I'm not keen.
And this is because we're on the daily time frame. If you got what was the time frame you were just on?
4 hour.
4 hour. If you got if it came up to the daily pivot on this particular 4 hour and didn't close above it, and then you got a reversal bar, a high test bar off the trend line, would that be valid?
It's valid.
Would you be trading the green bar?
It's valid, but it's also difficult because of the two reasons I just mentioned. You're at a support level and you're just shy of a support level. So if I were to trade that, I'm happy to do so, but I've probably got to put my stop here, and I've probably got to take profit for that level. So it makes the reward to risk pretty poor.
But you wouldn't. But what if the next 4 hour bar was a bar that enabled you to have stop at the high of the bar and the risk reward by the time the horizontal level came to 1-to-1? Would that be valid?
Yep. Okay. That works. Yep. So it's all about capital preservation for me.
Yeah.
It's not about, okay, I can see the big picture. I can see what's going to happen in my mind. That's what's going to happen. But I've still got to take into consideration that it may not happen. And if it doesn't happen, and I've taken a big risk rather versus my potential reward, when it doesn't happen, then I'm not happy with that. That doesn't work for me.
Yeah.
If it's like 0.7 to 1 or 0.8 to 1, fine, don't have a problem. But if I can get profit in the bank at 0.3 to 1 or 0.33 to 1, which is my setup rule, then I'm okay with that. So I take half off at a third profit, if you understand what I'm saying. So a third of the risk, if I take half off at that point, which is my limit, I'm happy with that. It reduces my reward substantially, but it increases my win-loss ratio substantially. And that,
it reduces the reward, but it also reduces the risk substantially enough. And that's what this is about. You're absolutely right. I'll go with that.
Yep. And there's no contesting risk and reward. It is what it is. The higher the risk, the higher the reward. But the less you're going to do it. That's maths. It's simple as that. So you can't hide from it. You can't. And what you need to do is just understand that. And when you understand that, you can work out a system whereby you don't need a high win-loss ratio. You can trade at 30% winners and still make good money if you've got a system that allows you to do that.
Yeah, agreed. This really is obviously when it comes down to, particularly when we're looking to trade charts, which of course we all are, regardless of whether we look more deeply into what's driving the markets, we're still looking at charts. But this is really about an equation, isn't it? It's about going,
it's all maths.
X, yeah. If X, then Y, and we have to really sort of trust the logic, and the only way we can do that, of course, is by making sure that we analyze the system thoroughly enough to say, mathematically, this is what's been happening. It's not what tends to happen, because obviously maths is fact. So this is what has been happening. So this is the way that I trade.
Yeah. So all you people out there are saying, like me, who didn't pay attention in algebra when I was at school, and I was looking out the window, looking at the golf course, should have paid attention to see, because as that shows, X plus Y equals whatever it equals, or minus 7 squared, or whatever that is, whatever equation.
Well, I suppose that's the thing, isn't it? It's X plus Y needs to equal this, otherwise it's not a system that I'm going to trade. And if you,
and let's face it, all of us started without that knowledge. Or sorry, that's not necessarily true, but we started not wise enough, I suppose, to understand the ramifications of going outside of those numbers, because we all want to be in the market. We all think we're going to get 10 to 1 every single time we enter a trade. But the reality is simple. It doesn't happen that way. Have you a trade?
No, mate. No, we can certainly have a look at the market. To be honest, I woke up this morning, and my internet was down. So I'm on this system on my neighbour's internet, and my main system, it was down. So he's literally just come on now. So I'm not in the Zoom on the other screen as yet, so I can't show you my screen just yet. But I will.
Well, I haven't revealed my trade of the week yet.
Oh yeah, it'd be interesting to hear your trade of the week, and I've got some stuff to show you on the COT and seasonal data, which actually would promote your trade here. So we'll talk about that in a bit as well.
But you don't know what it is, so how can you know it's going to promote?
Oh well, I don't know. I thought it was this one.
No, shite no. Oh, how would I ever go dollar yen trade of the week? Never. Not in 100 million years. That's the one there. But I think we might have already missed the perfect entry, if there was such a thing. I think Aussie Swiss is the trade of the week, and my reasoning is pretty much because of charts, as you would expect. And I've got an ascending channel sitting here. We're at the bottom of it. I just described that on pound US dollar, but that's only part of the story. The real story for me is this little chart. Now, this little chart, you can see all the lines that I've got there. But if you look at what happened prior to now, where we've gone big rally, big rally, big rally, come off that, and I'll go through this in case somebody recognizes what we're on about here. I'm going to call that a subtle warning, and I'm going to call that an overt warning, and I'm going to call that the wall of worry, and I'm going to call that an aversion point. So to me, this looks absolutely spot on for a long. You've got a very clear, in my humble opinion, inverted head and shoulders. If you put a line through the neckline, which is about there, you've got a break and retest of that neckline. You've got a potential bounce off that. You've got a monthly trend line that's been broken and retested. And you've got that little channel that I spoke about, and you're at the bottom of it. The only thing that really doesn't line up perfectly here, but it's pretty damn close. Okay, I'll say it's perfect, is the horizontal level. So to my mind, go away, you silly person. You know I can't talk at this time of day. The only conclusion I can come to here is that this is going to bounce and go at least to here. So I think Aussie Swissy is the trade of the week. Getting in, for me, is a bit of an issue. I don't know if I said this in Sunday show, but it may be too late, as I said, to get in even at the top of Friday's bar. But as always, there will be a retracement at some stage, and that's what I'll be counting. In fact, if I look at this, a retracement back to the daily pivot today would be perfect. We could pick that up there and then go long. So I think Aussie Swiss for me. How does the data go with that
line up with that one? Okay, let's have a look. I mean, from memory straight away, I can tell you that the Aussie's not particularly good at the minute when it comes down to the fundamentals, but then knows the Swissy. You know, the Swissy's, it's not one of the ones that you'd really be too concerned about trading against this week. The reason I thought the Dolly M was kind of cool is because the data is actually very good for that. And I'm going to show you.
Hang on, I just blocked my ears.
I'm going to show you that now if I can get it. If I can get onto it, where are we? There we go. Yeah, here we are. Okay, and then we'll have a look at some charts. And also, I want to talk to everybody about gold miners this week as well, and do just a little bit of analysis on that, because I think there's one thing about trading gold. I mean, there is a cryptocurrency. There's a couple of cryptocurrencies where you can trade gold and get a yield. You can get a return on your investment. Whereas if you trade just if you actually trade gold, if you invest in gold, if you go and buy a gold bar, then obviously there's no return. It's just about the price fluctuations, and the spread when you buy it is relatively high. So not the best way to interact with gold, but there's a couple of different ways. You can, as I say, you can either trade a crypto and get a yield, or you can trade the gold mining stocks or silver mining stocks. So I think we should have a look through those as well. But let me go through your trade to start with, mate, and have a look at what that's telling us.
Helen, have you got laryngitis or writer's cramp or something? It's great to see you in the room, but I haven't even seen a word type. What's going on?
Yeah, usually hear a lot from Ellen. Okay, so the Aussie dollar. Let's start with that. COT data is pretty good, mate. It's not outstanding, but it is pretty good. Up in the higher regions, not quite at the 80% mark, but not anywhere at the bottom. So it is suggesting that the bulls are more keen than the bears. Without them being hugely keen. And let's have a look at that on the buying and sell side. These are the sellers down here. These are the buyers. This is a little bit worrying that the buyers, even though they are higher, they look like they're coming off of a high rather than going up. You know, the chart isn't going up. The chart of the buyers isn't going up this way, which would be better. It'd be better to see this split here. And then see that start to accumulate some momentum. It's coming in the opposite direction. However, it looks like the curve may be slowing down somewhat. So that one looks okay. Sellers aren't in. So if you're looking at the Aussie, that looks good. Let's have a look at the Swissy on the same in the same way. And what we see with the Swissy is something similar. You see the buying pressure coming off a little bit. It was relatively high, but it's coming off a little bit, with the sell impression staying relatively stagnant, maybe coming off a shade. So you've kind of got, COT data, which is sort of like saying, relatively speaking, we're in a bit of a flat kind of period. Nothing really that clear, which says that if you're holding that position, that's absolutely fine. If you're going to initiate new positions, you haven't got the COT data really suggesting that you're going to get a huge run, but that might evolve over time. And if you're certainly trading at a low, makes a lot of sense. Lewis is with you on the Aussie Swiss on the chart alone. Yeah. And the data doesn't suggest you should be against that. Data's absolutely fine on that. The Australian seasonal pattern does look like it bottoms out here in November. This is the November to December period, and it looks like it's about to bottom out. This is around about week 2 to week 3, which does suggest a run up until December. So that's in your favor there, mate. Now, if you look at the Swissy, what happens with the Swissy in November does tend to be down or flat, you know. So again, you know, you've actually got something which is supportive of your trade. So you've got seasonals in your favor, hot data neutral. So, you know, all good on that front. And then you start to come into the fundamentals. Now, the fundamentals I think are quite interesting currently, because I don't want this one, I want this one. Because you're not just looking at the Australian data, you're also looking at China and you know, trading partners. And this morning, out of Australia, out of China, retail sales 4.9%, which is not only a massive beat, because there was an expectation that that Chinese data would be starting to weaken. Not only is this a big beat, but it's a big beat on the previous as well. So that's suggesting that the consumer is in pretty good shape when it comes to China. The industrial production year over year also picking up, you know, and we know with industry that they do buy a lot of iron ore and products from Australia. So another thing which could be flagging, you know, us towards the Australian side of things. So
actually, whilst you're on that point, mate,
yeah.
Alexis pointed, I don't know if you heard Alexis last night.
Yes.
She made a really nice point in that regard, saying that iron ore was now at a bargain price, and that China may well step in at that level and buy up. Makes sense.
It makes sense. Yeah, it makes sense. And it would make a lot of sense as long as, and this is the thing, and I think this is interesting, you know, if you were to trade the iron ore prices, which I know you can't on MT4, but there are other ways. If you were to trade the iron ore price, you'd want to see things like industrial production and manufacturing going up. Mm-hmm. You know, if that was coming down, I don't think you'd be so keen to look into that. But looking at some of the you know, partner indications, this is one of the partner indications that you'd look for. You'd look for a little bit of confluence in manufacturing, and the most recent data is good. Now, if you look at what has been happening to the Chinese data, we have had an uptick here. The question is, has it put in a bottom? You know, it's been coming down. Has it put in a bottom down here? And are we about to rise up to these kind of levels again, around about the 5 and 6% mark? Possibly. We probably want to see another couple, you know, maybe another month or two to suggest that, okay, at least we've got a trend starting. It's gone up and it's gone up. So we've got, if you like, right now, we've got a higher low. We've got a higher high. And will we get when it pulls back? Does it pull back to this level, or does it actually just pull back a little bit? So we probably want to see that on the industrial production and the manufacturing. But generally speaking, good. That's good data for Australia. Now let's have a look at some the other ones that we had from last week, and this is where you start to look at Australia and say, okay, maybe things aren't great. This is really worrying, mate.
Yeah, that wasn't good.
You know, it wasn't a great number, and you know, the employment change was down, and the unemployment rate is not just up. That's a substantial jump, 4.6 to, you know, from 4.6% to 5.2%. That's a substantial jump. That's a concerning jump in Australian unemployment. So not the best. And
however, there's a caveat. There's a caveat to that. Remember, we were talking a couple of months ago about the quarter data, or the quarterly data that would come out for Australia, and even month to month, that would have to take into consideration that both Sydney and Melbourne were in lockdown big time with COVID. Yeah. And that is now no longer the case. So the curve on both of those numbers should reverse, and reverse substantially, I would have thought, for the next read. Yeah. So, you know, is the market reacting to news? I don't think it will. I think it'll react to the forward news. So I don't think that's a negative. That it may well appear.
No, okay. I would take your point on that, and that is consequential data. So absolutely right. You know, that's not great. It's not necessarily sort of something that we can look to for a read about what's coming. PPIs again, raising quite a lot. So PPIs would suggest that inflation print is going to continue to go higher. Are they going to be under pressure to do something? We just don't know. Let's just have a look what we've got here. Yeah, okay. So this would be forward-looking. Job advertisements, forward-looking, month over month, 6.2% from a minus 2.8%, and maybe that's to your point that the lockdown would have said something. So yeah, that forward number, I would take your theory on that for sure. And if you're comparing it to Switzerland, again, Switzerland's numbers are okay. 0.3% on the inflation, which would suggest that there might be some central bank intervention. Retail sales up 2.5% at the start of the month. That's pretty good too. What else would we have from Switzerland? Trade balances, retail sales. That's probably backward looking anyway. Monetary statements backward looking, and not a lot actually, sort of when it comes down to the previous week. So Switzerland's always a little bit thin on the ground on this particular website for economic data. So if you're going one country against another, they're probably relatively similar. I don't think you're sort of seeing anything huge. And your point about the lockdown would explain some of those negative numbers, some of that negativity in the numbers.
Yeah, so I think on the raw data alone, you'd probably be favouring the Swissy a little bit, but I don't think that tells the story.
Yeah. Now, because of what we've just had out from China as well, back to some of the equities. What we've just had from China wouldn't suggest that we would see major downside in equities, and the FTSE is coming down this morning, but it may well have just hit that level of support here. So I think the FTSE's got a chance to start rallying relatively soon. I'm not sure whether it needs to come down a shade further, but I think this rallies relatively soon. I'm not interested I wouldn't want to hold a long position, a big position from here. I think if you're looking to buy the FTSE, which has got a little bit more room to the upside, then I'd probably want it down here near this trend line, near this horizontal level, and a few days to get down there should meet the horizontal level and the trend line. I'm still really interested in this here and what this suggests about where we eventually end up on the FTSE, and I think we might well be on top of that now. So this would be the concern with the FTSE. Sorry, I thought there might have been a little while to go, but it's not. We're on top of this now. So now what happens is that we wait for the news and data, which is going to just topple over the or take the last finger off the cliff, because the FTSE is up at these elevated levels. Same with the Nasdaq, and the Nasdaq's got a similar level here, but not on a weekly. It's on a shorter term time frame. Similar position where you've got this upper trend line suggesting that we might well be in this range here. Same with the Nasdaq. I'd be looking for the Nasdaq to come up, test the horizontal level along here, test the trend line, and then start coming down. So that's within around about 30 or so pips, 25 pips to the upside, and I'll be looking for the Nasdaq to roll over. Same with the S&P. I think the S&P may well be there already. Let's have a look. Yeah, the S&P is right on top of that number, which doesn't actually bode that well for the Nasdaq to get there. It could do, but the S&P is already there.
Some of you guys in the room would be trading this long today, right? It's the third Monday of the month, is it not? I think it is.
I think it's next week, but no, yes, you're right, mate. Yeah, third Monday of the month. Yeah, it is. And if you look at the data with both the S&P and the Nasdaq, yes, you could get a relief rally today or some sort of rally today. But look at this on the indexes here: 0 and 0 on the short end of the COT data. Nasdaq's low as well. If we sort of like break down what's been going on with the Nasdaq on the buying and selling side, what we're seeing here is a huge increase in the selling pressure here. If you really were to able to zone in here, which I'm not sure I can. Yes, I can. Here we go. So the buying has increased, but just at the same time, the selling has increased, and this selling pressure is accelerating to meet that buying line. So there is a little bit of concern out there when it comes down to the NASDAQ. I think that there could well be a move lower. And I think, again, with the NASDAQ, we haven't really had the opportunity yet to test this horizontal level. And I still wonder whether we might do that. That's close, but it's not close enough for me. I'd like to see it just a little bit lower before I see the bulls come back in. So I think it's under a bit of pressure, mate. I think the stock market is under a bit of pressure. You still got? Hold on a minute. Is my
I've got your data chart. I've got your what do they call that thing?
The cot data. Now, why is that doing that? That's strange. I've taken it off my screen and close it all together because we don't need cot anymore. Move that out of the way. There we go. That's better, isn't it?
Of course, the most obvious and elephant in the room thing is, under all the pressure that we're saying, the indices are or about to be, they just keep making record highs. Amazing, isn't it?
Yes, they do. Yeah, they do. And yeah, it is amazing. And I'll tell you that one of the most interesting things about this is that there are two really important numbers that I think we've had in the last couple of weeks about the data, and that's this number here, which is looking at the chart. Look at this. Look at the jump here, 0.9. Right now, this one was also 0.9. So let's have a look at that properly. This one was 0.9, but it was coming from 0.6. This one was at 0.4 to 0.9. Now that jump is the area that people are talking about. Now look at this anyway. Regardless of whether we're looking at the jump in CPI or whether we're looking at how high that number is, we haven't seen a number this high since 2008.
Mm.
2009, 2008, 2008. We haven't seen this number that high. But the actual velocity.
Guess what happened next?
Exactly. I mean, I don't know whether you could necessarily draw the conclusion that that's going to happen now, but you could certainly say that is a concerning sign for US equities. So CPI data high, which is suggesting that money isn't quite as valuable as it was. So what the consumer has in their pocket doesn't have the same amount of value. And then you come down to this number here, which is the University of Michigan Consumer Sentiment Index, 66.8 from 71.7. I mean, that again, massive drop. And look how low that is. So what that's saying to you is that we've got, firstly, consumer spending power is weakening, and we've got a lack of confidence from consumers. Does that say go and spend, or they will be spending? Business is going to make money because or business, it should be making money. Now, the interesting thing will be the next earnings season. If these numbers were to continue, you would say earnings season is going to be poor. But somehow this earnings season was incredibly strong and GDP was tepid. So how do you figure that one? And obviously you then go, bit of manipulation seems to be going on to me, mate. I mean, I don't know. I don't know what these companies are up to, but they're certainly not selling more products. And those numbers aren't quite as binary as they seem. Share buybacks. You can do all sorts of things to elevate your stock price. So that kind of manipulation and that kind of jiggery pokery can't go on forever. Eventually, you've got to sell stuff and make the numbers real. So I'm looking at the stock market again starting to fall, but as you say, the stock market, the equity market, is not currently doing that. So what's this about? And does that mean that it will continue to do it? And does that mean we should hop on board with a madness? Or does it mean that we should be either keeping our powder dry or trading in the opposite direction? Well, in a way, you have to say you've got to hop on board with a madness because that's what the chart's saying. But you've got to be very, very careful doing it and get ready to flip positions. Because there is something that, as I say, could just lift that last finger off the cliff before things start to fall.
Yeah, look, worst person on the planet to ask that question of. I got I sold all my stocks in the ASX when it was 4,000, thinking, oh, this is in for a crash. This is just big correction coming. Big correction. It's now 7.5.
Right.
So yeah, wrong person to ask. And I'm still out. Still got nothing in them.
Yeah, it's really difficult, mate. It's there's no question that that trading stocks is incredibly difficult, unless there is one method that I think works every single time. And firstly, it's about the buy and hold method. Works every single time if you wait for a deep correction.
Yeah.
And if you wait for that deep correction, whether it's coronavirus, whether it's a banking crisis, whether it's an internet bubble, I'm talking about the big ones, then you can't go wrong, because intervention from the central banks come in and stock markets will go higher than where you got into it. Now, you don't have to trade single stocks even. You can just go, I'm going to go buy the ETF and just trade the whole index. But I'm waiting for that big moment, because if you wait for the big moment, even though you could be waiting 10 years between, that's the time to start accrue cash, wait for the moment, get in and leave it. You know, as long as you've left your cash, specifically for that. So you're not kind of delving into it to pay for utilities at home or something like that. But it's the one thing that you can do. It's the one way that you can always make money out of the stock market. And it's very inactive. But I think it's the one surefire thing that I've seen since trading the markets that you can't fail to win at, and you win big. I mean, that's the polar bear, isn't it? You win big every time because you're getting in somewhere near a lower point. Now you got to wait for a deep correction, and you might not find the low, but it doesn't really matter as long as you find a point that it's going to go beyond. You look at the Nasdaq now, over double what it was before the problem. So imagine imagine the amount of money everybody that got in down here has made.
In 2010, if you invested in the stock market, you'd just be thinking that there's no way I can lose ever.
Yeah.
Wouldn't you?
Yeah, absolutely.
You're back at 2020. You go back to 2010. It's just incredible.
Yeah, here you go.
Just amazing.
2010. Change it to a monthly.
Look at
and that has gone from 2,000 on the Nasdaq to 16,000 on the Nasdaq. So yeah, you're up 8 times plus dividends. I mean, we're talking about the Nasdaq, so maybe the dividends wouldn't be quite as significant, but you could do that with any of the indices and say, in fact, let's look at the Dow. Which is, where are you, Dow? Here we go. Look at the Dow back at this particular point. That was at around about 10,000. It's currently at 40,000 or 35,000. So it's up 3.5 times plus dividends. And as I say, you managed to hold through all this. But look at these lows. I mean, that one there, you pick up that one. Well, that one probably wouldn't have seen as a low. But this one during coronavirus, you pick that up. You're still making all this cash. So yeah, that's the technique, mate. That's a surefire winner. Now, whether you feel comfortable waiting for that and losing out on all these other gains is your own technique. But I'm just saying that's the one way you can always win in the stock market. Buy the ETF of the whole index.
I mean, I think I was about to use the word foolish, and I shouldn't say that because that's not true. Everyone has their own thing, but if you are willing to park some money, and as you say, wait for a big correction in just about anything, really, at the end of the day. If you're willing to wait for a big correction and park some money over time, you should do fairly well. Then you can go about doing what we do day in, day out, and you forget about that money. Forget about that. It's an investment, right? It's not a trade. It's an investment. And, I think that's a very, very wise thing.
Exactly.
Hey, it's nearly time for George.
Exactly. Yeah. I was going to say, mate, yeah, I might not. But just before he comes in, I just want to just quickly touch on a couple of these stocks here, because we got
Sure.
mining stocks doing really, really well. So we got Fresnillo is one of them. Now, of course, I'm looking at FTSE 100, but you could look at some other ones, and maybe through the week we will. Maybe we'll do one at a time. So let's have a look at the general chart on Fresnillo. We've this is a silver mining stock. And you can see over the course of, let's have a look at the dailies. Let's have a look at a chart we like to see. And we can see since last March, you can see that this is starting to pick up some pace on the chart here. But you can see also that it's nowhere near its high, its all-time high. It's still another 40% to go before it needs to get to the high. Now you are waiting for a little bit of a pullback before you want to get into it, but it looks to me like these mining stocks are starting to pick up some pace. It was down at 770, 750 at the low, currently near the 1,000 mark. So Fresnillo is an interesting one to look at, and as I say, there's many others. Now, if you just have a quick look at the data points on this as well. Let's have a look at what
I get interested in that because it sounds like an aperitif.
Fresnillo, yeah, it's they mine over in Australia actually. But looking at these numbers here as well, just a little bit of upside coming in here. Total revenue is increasing. You can see that the blue bars have started to increase here. The net income looks like that dropped a little bit over the last year, but I think that if we still see silver going up, that's going to start to improve as well. And in fact, you can see the numbers here. So total revenue has increased from 1375 to 1466. Gross profit is up 50 from 571 million to 607. Operating income is higher. Net income is just a little bit lower. So there might have been something to do with possibly changing some equipment or whatever. We'd have to look into it a little bit deeper. Let's have a look at their assets. Assets are up. Liabilities also up, but only up a shade. The assets are up a greater percentage, and you can see that the total equity therefore is up. Free cash flow, revenues per share. Now we want to compare. So cash from activities, actually is down. Cash from activities is down over the last 6 months to June, but that was when the silver price was low. So that's likely to increase. Cash from investing activities is better than it was, but it's still a little bit negative. Financing activities, net change is lower. But so these numbers should change. These numbers should change to our favor if we are to see silver and gold move to the upside. These precious metal companies are going to start looking really interesting. So I'm looking into them. I'm looking at Fresnillo. I really like Polymetal. That's one of my favorites. And I will bring you Polymetal. Polymetal International, but I'm trading on the UK index. Here we go. The Polymetal International. I really like this company. They mine over in Russia. Again, you know, we have seen a nice big boost in the chart already. It's already started to potentially bottom out. Let's bring it onto that one. And again, bring in where the highs are. The highs are up here at 2007. They're at currently around about 15. So, you know, again, another 35% rise could be on for that. I'd really like it down here at 1422. You know, that would be a really good technical level, nice horizontal level along there. And it looks like a decent horizontal level there. So a little drop in Polymetal would get me really interested in not trading it, but buying it. Now, we're just talking about waiting for substantial pullbacks in this stuff. And this is a substantial pullback. You know, we've seen it drop from 2000 all the way down to 1200, sorry, from 2001 down to 1250. So a near 50% drop in price. And, you know, are we seeing signs and signals that this is bottoming out? I think we are. You know, you could start to look at trend lines and all sorts. to see where this is, and it looks like that trend line might need to be nestled above before you are really confident and able to trade this with a little bit more certainty. But I'd be trying to get into this relatively soon. And then looking down here, let's see if we've got some financials as well, really quickly. Financials, total revenue is down to June to June the 30th, 2021. I think that's going to improve as we see the gold price go up. Gross profit again was down at that particular point. Operating income and all those numbers are down. So what we're waiting for really is the December report, and you could do that. You know, you could wait for the December report and then get in if you're looking to buy and hold something longer term. Or you can get in on a technical basis and hope that those numbers actually do improve. But I think that there's probably, this is only on investing.com. There's going to be a way that you can just go out there, go to the Polymetal website, download their financial data, start looking at them as a company and see what news and data there is about them and seeing if they're of any interest. But Polymetal, Fresnillo, Centamin as well is an Egyptian mining gold company. You know, there's Barrick Gold as well, which Warren Buffett was incredibly interested in when this all started as well. So there are Randgold, and there's lots of gold companies out there well worth looking at. I'm trying to think of. There's one other one that's one of a favorite of a buddy of mine's. But you know, if we're going to continue a conversation about gold, then do some research and bring it in, and we can have a look at some data. And if you want to have a really good look, then we'll have a look right through the company's balance sheet and see what they're doing. But that's what I'm looking at, mate. I'm looking for something that I can buy in relation to gold and silver, which actually pays a yield, and not just buy the asset.
Yeah,
you know, and so you could do it with cryptos, but I've got a bit of a problem with doing it with cryptos because I don't want to nestle everything into the cryptocurrency market. I still think there's room to go with the crypto market for sure, but I think, you know, we may well be putting too much trust in it if everything we do then all of a sudden starts to migrate towards trading it in a crypto way, like trading stocks through cryptos, trading gold through cryptos. You know, I'm not saying it's not valid and it won't work. I'm just saying it makes me a little bit uncomfortable to put everything into that particular arena.
Can't imagine why. The history behind gold versus the history behind cryptocurrency, there's just a tad of difference in there.
Yeah.
So just a tad.
Yeah.
Mate, I think that's excellent.
Also, there's still lots of regulation that needs to be sorted out with the crypto market, you know, and when that is, then you can interact with stocks through cryptos and you can interact with gold through cryptos. But until that particular point, that probably won't be something that I'll be doing.
Yes, they do pay dividends actually if you trade them the right way. Unfortunately, or do you mean the gold plays that Ash has just mentioned, or the crypto plays? There are a lot of crypto plays that actually do pay dividends, and pretty attractive ones at that.
Yes, they do. These stocks do pay dividends. Let's have a look. So, you know, you can look between investing.com and Yahoo Finance to get just a free overview before you delve a bit deeper into some of these companies. But let's have a look at Polymetal. And
George, we're getting there, mate. We'll be there shortly.
Oh yeah, last one. Just to show you the earnings here. So we have got a forward dividend yield here. Forward dividends and yield of 6.43%. So decent. You know, we're looking at decent numbers, particularly at these low levels. That will decrease as it goes higher, but particularly at these low levels, you will get a decent dividend.
Happy days. All righty. Let's bring George in, but just 1 second before we do, Lewis is letting us know that if you invested $1,000 in Tesla in 2011, you would now have $20,000 to play with.
Unbelievable. Assuming,
of course, you didn't bank anything. And that's not me. But yeah, sorry, Ash, what did you say?
I was going to say, I mean, you know, we're talking about a penny stock in a way, aren't we? The way that Tesla moves, you'd have to compare it to a penny stock. It's just crazy. You know, the way that thing goes is is astonishing. My favorite company in the US, pretty much bar none, is Nvidia. But try and get on board with that one. You know, it's just crazy. I mean, I won't now go into that because I think we need to get to George. But you know, this is a discussion we can expand on. The main takeaway for today is look into some gold companies if you're interested in trading gold. I would encourage you to look into the companies that pay a dividend.
Yep, happy days. George, mates, we had a little survey earlier in the show, and there was divided opinion. You know how? Well, you probably don't know because I've just made it up today. I'm now calling Ash, Affable Ash. I'm calling myself Geriatric Jeff. And I need to come up with a name for you. And the survey said on the male side of things, we should call Gentleman George. On the female side of things, it was Gorgeous George.
Oh,
which would you prefer, buddy?
George.
Gorgeous George. I mean,
there you go.
Gorgeous George. Was he a fighter? Gorgeous George. Wasn't it Gorgeous George Foreman, or was it not Gorgeous George Foreman? I don't know.
He's a lover, not a fighter.
That's right.
Of course he is. Of course he is.
So from this day forward, it's Gorgeous George. Welcome, Gorgeous George.
Thank you to the female side of the show. Brilliant.
What's going on, buddy?
Let me just share my screen quickly and just show you what we got. So I want to look at gold and share my technical view. It's nowhere near as exciting as the fundamentals that you guys are talking about. But before we get that, just euro. I'm in a trade. It looks like two trades. It's one trade because they're just 0.5% each, half the risk size. And I want to show you just the daily, just to show my rationale for that. Now, the daily is very interesting. It's a bit messy because of all the lines I've drawn on the 5 minute, but I think we can follow it. So if we look where we closed on Friday, that little doji bar is a problem for the bears, because if the bears were strong enough to create this breakout beneath here and a follow through, we should have had a decent sized candle there. But that's one. The other thing as well is we're at the bottom of a wedge, 3 push pattern, 1, 2, 3. And typically when the market gets to a 3 push level, that's a level of support or resistance, depends on how you're looking at it. And the typical is a reversal and then a continuation. Few more things happening there as well. It's a bit messy. I don't want to delete my lines on the, but let me just explain it a bit. If you have a look at this little trading range that we had here, we had this reversal candle that created a double bottom. Then the market went sideways. So that is a trading range. Whenever you see a trading range, question you got to say to yourself, if you're a bull, how far do you want to go? It will be a measured move of the trading range. If you're a bear, where is the magnet, rather, measured move. So it's all just down here, just below where we are. There is also this trading range here, which we spoke about quite a while ago. And again, same thing in break above, measure move, break below, which we did. Bears want to go to a measured move. And it's all down here. So if you are trading on this time frame, you'd have to be a little bit careful about where you put your stop. But when you go down to the 5 minute time frame, there's quite a amount of space that you can take your trades in. So I was up somewhere a little bit earlier here. I'm in Central African time zone, so if I get up early, that's like 3 in the morning to try and find these trades, and see if we can get in early. So I mean that move happened, but for me, I had the high of the previous day there, which was Friday. So I was expecting to see some kind of a bounce that was good, but I had to wait to see a bear candle form. But that bull candle formed while I'm busy working out my stops. I was a bit slow. It's early in the morning. I had that close beneath there. That's where I wanted to be triggered. So I should have put a stop there. So the ideal thing is to put a stop order, sell stop. But when I saw that forming, I didn't know how far it would go. So I just hit sell the market. That's why it goes 2 entries close to each other. 50% of the 50% of 1%, that's 0.5. Then I just put my stop at that stage 20 pips away. Okay, that's where the stop is. So once I see what's forming down here, then I can bring it down.
Sorry, George.
Listen.
Is there a reason for 20?
The reason for 20 is if I went, okay, so the correct place to have put the stop would have been here, Jeff. That's 9 pips. But with spreads and all of that, anything less than 10 pip stop, it's just gets so frustrating. Market can come.
I agree 100%.
So 20 pips, okay, I mean, you put in, less in the market, but that's fine. So the market can get to there or just above, and I'm comfortable with that. So I try and go for a minimum stop of 20 pips on all my stop orders. The only time I don't put, if I put a tighter stop like 15 pips, is if the trend is moving in my direction and there's a pullback, and that pullback candle and the nearest other technical level, high, low, lower, high, is within 12 to 15. I'll take 15 because of everything to the left chain where we got momentum behind us. But when it's still setting up like this, we could get that wedge pattern, that I was talking about. Market could go up, come down, go up, come down. So you might get a wedge push before it settles in. So that's why I just allow that to happen.
Yep. Cheers, mate.
Okay. Yeah, so I'm going to leave that there. I'm just let it play out whichever way, if it resumes or if it carries on. I want us to see how far I can hold that. But if we start to get momentum going down here, then I will add a bit more at that stage now. If I take a trade here, my technical level is here for my stop, and I can pull all my stops to break even or somewhere about there. So that's what you got on the euro. The other one that I've been looking at is gold, but it's interesting. Now this is purely technical. I mean, I absolutely love. I was listening carefully when Ash was describing all the gold stocks, etc. It makes sense as the background information that's taking place to what I'm seeing on the charts. But I'm looking at what's on the charts, and that's what I want to trade. So where I think the bulls want to go, okay, after breaking out above this double top, very poor follow through. I mean, the bulls are strong. At this present moment, they should have, given us, taken out this tail, at least close a bit higher, broken above that. So now we have a top there. That's a level of resistance, which if you trade in intraday, for me, says I should be looking for shorts in the day because that's a trading range. But where do the bulls want to go? Again, measured move, low of this trading range here. Low, high, measured move is up here. What is that? That's 1.94, 1.95 level. 50% above that is there. Again, like I explained before, there's a bit of a small trading range here. Okay, and we got to that measured move. Now, I have the measured move, which is also the high of that particular doji candle, that trading range candle. So that's a pretty strong level of resistance at the present moment for what we're looking for.
So I'd agree with that, George. I mean, I think the gold and silver market look like they need to settle down a bit and almost create a bit of a range just to get their breath. Yes. Before taking off again. I've got quite a good, quite a lot of confidence in the gold and silver market coming up, but you can't just see it just explode. I mean, if it was to do that, then I think it would come down just as hard. So building some people up on the way would be good. And these measured moves, I mean, I don't know how much you've analysed gold, but Ainsley tells me that it's very respectful of levels, and I wonder how often these measured moves actually play out as a resistance zone, form a range, and then go again.
Measured moves on virtually every market. I mean, they're magical. You'd be amazed.
Oh, really?
If
Okay.
you really start to look at them. And probably the best place to start is when you got trading ranges, use them. When you got that first breakout and then the pullback, if you do a measured move of the start of the breakout to the top of the breakout and see how far it will go, you'll be amazed how many times you get there. How we get there is what, it can be 3 push pattern, wedges, whatever it may be. But they work phenomenally. And the key thing is they are hidden levels, right? So
yes.
if you don't, I mean, before I started immersing myself in them, you kind of, why is the market turning here? Oh my goodness, I should have taken profit here, but why? You don't know, kind of thing,
Yeah.
But now they kind of just pop up everywhere. And you can see they're like a magnet. You're going to pull the market there. And it's a beauty when you got a measured move, you've got another prior visible level, double bottom, whatever. Then you just get a lot more confidence to take your trades, or get out of trades or take profits, whatever it may be. But they really are powerful price action tools to use.
Do you know what? One of the things I really love about it is that it's simple, isn't it? I mean, it's just here's the Jeff and I were talking about the logic of maths earlier on, and this is mathematical. Is a range. There's a mathematical number, which means that it's gone from here to here, which means we're suggesting it's going to go to here. It's brilliant.
Yeah. And I mean, if you got guys that use all these clever algorithms and computer trading, they will tell you that measured moves is what they use, to set their targets, because the market is likely to get drawn there, or bounce off, case may be. So, and it's an easy supplement for whether you trade in fundamentals or whatever. It's just there that can add to some other things. So on gold, lower time frame, then I don't know why I call it lower time frame. My time frame. So because of that trading range that you saw, I'm looking for shorts for today. That's what I need to see. But it needs to set up quite well. And what I mean by that is I try and have a very simple approach to the trading. So when I see like that top there, I say to myself, okay, there is a pattern that's certain. What I then want to see is a lower high. Then I look for my entry. It's as simple as that. So now I can just wait and see, if we do get a lower entry. If not, we don't. Okay. That's what's on my immediate watch list, right? Everything else I'm just tracking.
You looking at any indices, George?
Yeah. So indices, I've got. This is US 500. I've got it as a buy. So I've got US 500 as a buy. I've got the derivative of your FTSE, the UK 100 as a sell. Hong Kong 50 as a buy, and Nikkei 225 as a buy. So that's what I'm looking for today. So on the US 500, this is great. So I have a double bottom. We've broken above that trading range, which is fantastic. I know we have the high of the day so far. So if we can get above that, just see the way we're breaking above this trading range here. Good candle follow through. If we get that above here, good candle above that and follow through, and then a pullback, then definitely I'm looking to find ways to get into the US.
Yeah, well, I don't know if you know about the third Monday of the month data, but third Monday of the month tends to be a buy on the S&P. So looks like
is it?
Yeah. So there's the
it's got. Is it 90%?
It's a crazy number. It's high. It's in the certainly in the high numbers. 90.
Yeah,
certainly definitely between 85 and 100% probability of success that the third Monday of the month is positive for the S&P.
Yeah, one of those crazy
And when I
things.
say positive, the close is always above the open, 85 to 100% of the time.
Wow. I mean, that's
And you close at the first positive, don't you? First positive close.
Yes. Sorry, you just go through that. I'll be with you 1 second.
The reason I added it on as a buy, so I can just explain, was because of this. So out of that trading range, very strong breakout. We spoke about this pullback is likely to happen sometime last week. Bounced off the 10 moving average, EMA, which I use as an indicator of strength of a trend. So that bounce, not a surprise. That inside came, not a surprise. Then when you had that on Friday, it just follows what I was expecting. Strong trend, pullback, resumption. So strong bull candle. Then you're going to be looking to see if you can get in, because what it suggests, just based on the height of on Friday's candle, is a measured move right up there to the 4.7 area. The bulls are still trying to get much higher. Okay, this trading range here suggests low, high measured move right up there. So there's quite a long distance for the bulls to get to. And this is just bouncing off the 10 EMA before there's a substantial correction. But the fact that we've had the pullback to the 10 EMA is good for the bears, be it profit taking, whatever the case may be. So that's why for me I've clocked it in as a buy. That's why I'm looking for buys.
Yeah, it's interesting, George, because last week we were talking about the potential for the S&P topping out around about here. I mean, is that still your view? Are we looking at a short-term trade? But actually, our view is that we still come down and test that where the measured move has come from previously, that dotted line below price there.
Yeah. So because the market has come back, remember this is a 10 EMA, so indicates for me strength in a trend, and it's bounced off here. So it's created a little trading range, top and bottom, which suggests that the bulls still have a little bit more room to come. Now this is, if it goes that way and then eventually turns, and we ask ourselves, hey, hang on, when did the bears start coming into play? Would look back here and say, well, that's where it started. It was profit taking, but the bears weren't strong enough to turn the market at that stage. So from here now, I start to look. I don't know which way it's going to go, but I start to look for those three push patterns. So the bulls may come up, go up there. Then they're likely to bounce off again. We come back. Might be another third push pattern. If we get that wedge, fantastic. Then we know we are now in a trading range, and let's see how we trade before we break down or break up. So where this weekend is going to tell us if the bulls have strength, how far they'll go. If they give us successive bull candles, then we're back again in a bull breakout. We have to wait and recount the whole thing.
Interesting.
Okay. So
describing in my parlance, three little Indians. And that suggests to me that there's downside coming if that were to be the case. So really what the chart would then tell me is you're saying retrace, rally, and I get that. But we're really describing false breakouts of those levels.
Yep.
And if three false breakouts in a row gives me my three little Indians, and I always look for the range that they've broken out from to break to the downside.
Yes.
That's the thing of mine.
Yeah.
So that's what I'd be looking for if you do get that. Happy days.
Yeah, if we're saying the same thing, so if you were to take a trade up here, double top, whatever, that's a target, right? That's the initial target before we can hope for anything else, because then we're going to a trading range, then we can pick it up from there.
Awesome. You would almost describe that as gorgeous. So we're looking at, I want to go back to the euro versus the dollar. You're saying that you're not 100% sure that there's got more downside, or you're saying short term? Are you a bear long term?
No. Long term, I'm not. So let me put up the daily, and I'll explain to you again. It's because of those measured moves and hidden levels of support. Everything that's here, that's my problem. This support levels out of this trading range and out of the bigger trading range. Okay, this bigger trading range here, this support level, that for me suggests that there will be some sort of a bounce off this level of resistance. It may happen today, it may take a couple of days, but I think we will get back and get that pullback to the 10 EMA. So if you don't take any trades here, you're just going to have to wait for the pullback, because there's a good breakout. But now you want to see the pullback and see if it tests that level or just test the 10 EMA. For me, trading the 5 minute, if I see that pullback to that 10 EMA and a decent reversal candle, then I can take a trade. Alternatively, if I see just a bounce, so let's say we see a candle like this at the 10 EMA, I'm going to go in, look for shorts before even that 2-bar reversal sets. I could get in a day earlier and then still wait. So that's the area that I think might create a bit of resistance in the bounce. If the bears are strong, they would have shown us already. But today, being the third month, the third month of the month, they may just come out of their caves and surprise us, if you know what I mean.
Who knows, buddy? Who knows? Not me. I find that interesting because I'm also in Eurodollar short, and I've got my level as 113.85. So okay. I'm a little bit lower than you are, and I'm happy to see a level that doesn't agree with me, because if I do see that level bounce, then I'll probably want to get out.
Okay. Let's see if it gets a little bit, it's even messier. Now, what's interesting is by looking at this trading range here, this is on the weekly now, right? And as a bear, you're saying, well, if I break out of this trading range, where should I be taking profits, etc., or how far should I hold my trades? Well, the first level that could pose you a bit of resistance is 50% extension of that trading range, which is the zone where we are presently. So all that bouncing that's happening is not a surprise. But if the bears are strong enough, even we get a pullback to the EMA, the bears want to go this far. Okay, I'm sure that's there. So that level is even more aggressive than yours, Jeff. That's 11.324, based on a break below this trading range.
George, can you put a vertical line? You see where you've got your 100%, what do you call it, measured move on the top of the M pattern?
On this one?
Yeah, if you draw a vertical, yeah, perfect. Now, the way I look at reversals is what happened on the left side of symmetry is likely to happen on the right side of symmetry. Okay. So my ultimate target is pretty much exactly where you've got your big blue line down to 106.35.
Yeah, down here.
Yeah, there's a lot of work to do to get there, of course, and we could be talking this time next year and we're still not there, but that's kind of where I see this pattern concluding. So that pattern,
20, right?
Yeah,
there.
Yeah, well,
yeah.
There you go. Could well be the low of 2021, but it'll want to get a rattle on because there's not that long to go. But that's exactly how I trade reversals. If I see that symmetry potentially play out, then I want to be in as long as I possibly can. Now I've actually traded this on a 1 hour chart, and it's going extremely well. And I have closed my stops up because I see that level that you see. And I do think there's potential for this to bounce now. If it does, it does. And it's as simple as that. We've made some money. That's all good.
Yeah.
But I'm looking for those levels that maybe I'm not seeing that you are, where I can maybe scale into this. So yeah, happy days.
Yeah, I learn every day. So there's two things I'm taking out is that US 500 the third Monday. That's brilliant. And the mirror effect, symmetry effect. Never come across it. So I'll borrow those two from you, two wise men.
Cheers, mate. Look, I think I'm the only person on the planet that does it, frankly. But I see it happen. I see it happen all too often, and I think, well, okay, let's take advantage of that. But it's not every single day you see it.
Yes, yeah.
But when I see reversals, that's the very first thing I think of is, okay, coming down this side, maybe it's going to be the exact mirror image of what happened on the other side.
That's brilliant.
There you go.
Right,
Write it down. Put it in your little back. And, mate, we've held you up longer than the contract says. But like I say,
I've enjoyed it, and I learn a lot. So I really appreciate it. And if any of you guys want to join the gorgeous show,
Gorgeous George reappears on Wednesday at
9:30 GMT, because GMT and London is same. So it's easy maths for me now.
Only for a short period, then it changes again.
You have to remind me.
Yes, indeed. I remind the elephants, as I always say.
All right.
Thank you, George.
Thank you very much. No, appreciate it. We'll catch up next week.
Thanks a lot, George. Mate. Brilliant stuff, mate.
Cheers. Take care. Bye.
Bye, mate.
Okay. Well, we're wrapping anyway, aren't we, mate?
Pretty much wrapping. Yes. I mean, George has pretty much been through the euro dollar thing. I suppose I should update those who have managed to get in it with me before I go any further. So speaking to George, as I said, and this is my chart of euro US dollar, and look, it saved my bacon last week, but it's probably one of the better trades that we've had in quite some time, because we traded this little candle here. And if you actually traded the slingshot, you would have had a 10 pip stop loss. And that's what I was talking to George about that. It's very, very difficult to have a 10 pip stop loss in a market that moves reasonably more than that. But had you done that, that's now at about 13 to 1 or something like that. As it stands, I think we're about 5 to 1 or whatever it is. I think I took 20 pips of stop loss up to there. So the stop was there. And we're now 130. So we're 6.5 to 1. That's a pretty good trade. And that's why I've got an issue now. What do I do? Do I give this as much space as I can? And if that were the case, my stop loss would be above the weekly pivot. But then I look at the chart and I say, well, how is euro dollar reacting to the weekly pivot? And the answer is it isn't, to my mind. It's breaking, it's false breaking, it's going all over the place with the weekly pivot. So I don't think that's a whole lot of protection to me at the moment. I'm inclined to follow this far more tightly now because I see exactly what George was seeing. But I also see this level here, as I said before, 113.85. Yeah, it's a cloud of a price. I get that. But that's where I want to take some more profit at that level. I think that's a bit pertinent. And I do think it'll bounce there and probably come back to here. And if that's the case, it's going to take my stop no matter what. So I want to take some profit if we get there. If we don't, we don't. And I probably won't even think about scaling in until we get back to there. If that is the case, there's a confluence running through there. But I just wanted to update you on that. And again, with the symmetry scenario, I don't see this as an impossibility down to here. I really don't, around about the 106 mark. So I'll be following that for quite some time. All right, we're done, James. We're out of here, buddy. we have taken up far too much of your time, and it is Monday after all. I know you need your beauty. Oh, sorry, I need you. You need to. Thank you, James, for looking after us. Ash, as always, thanks for being my trading buddy, and everyone else in the room. Thank you all for being our trading buddies. What's doing for the week, mate? We catch up on Thursday, right?
Catch up on Thursday, and we'll maybe have a look at some other bits and pieces. We'll probably look at a little bit more of the gold stocks because we've got Ainsley in as well on Thursday, plus the quiz. So yeah, we'll be on for then, mate. I am still going to be looking for some shorts. I think this week is a bit of a short position for the indices, so I'm going to look for opportunities with that. For everyone else, have a great week, and thank you to you, mate, and thank you to James, of course. See you on Thursday.
Have a good one, guys. Bye-bye for now.